Hey guys, Stock Saturday, and it's been a decent week. I'm up 3% in total, which is a little bit better than the S&P is up 0.76% for the week. Did sort of have a little rise up towards the CPI numbers on Thursday, and then sort of took a little tumble, but sort of recovered. Nasdaq, not quite so much. Was rising similarly, and then took a real dip on the inflation numbers, which was surprising because you would think this is leading to rate cuts, and that's what seems to have been driving a lot of this market recently. And yeah, so it ended down 0.31%. So yeah, 3% gain. Very, very happy with that. It's sort of largely come from gold and silver stocks. Crypto sort of still a little bit up and down. Some of them are up, some down. And yeah, let's have a look at some bits and pieces. So we had TSMC's monthly revenue. Not sure he looked at this last month, but yeah, sort of similar numbers. May was 30.1% up on May last year, and June was 32.9% up. So pretty good. They were saying this year would be sort of a bit of a slow and steady year, and sort of looking forward to 2025. So yeah, to be getting 30%, so we had a 60% year, a bit of a bumper year in a month in April. I think the AI sort of trend has caught them by surprise, maybe a little compared to sort of late last year. Obviously, Nvidia was sort of already running back then, but they didn't want to sort of project it forward into this year. So this is all good. I would imagine a lot of this is coming from the sort of AI increased revenue. So yeah, we'll see. So without any earnings or anything to cover this week, I thought I would dive into my sort of extreme bullishness, it seems, on companies like Equinox Gold, and sort of why I'm going the options route. I obviously think gold and silver are going to do well sort of over the next year and a half, or year to year and a half, off the back of more sort of money printing, however that comes about. Sort of got fiscal deficits in the US, US government spending probably 2 trillion, close to 2 trillion more than they're taking in this year. So borrowing more, increasing the money supply. UK are doing similar, obviously smaller numbers. The EU are doing similar, it seems, and China are sort of in a reasonable recession. It's been looking like with their housing sector going down, so they look like they are stimulating more. You've also got reducing rates from the looks of it over the next year. It's a little bit slower than we sort of all expect, but it looks like it's coming. That would generally be sort of positive for gold. And you've got central bank buying off the back of sort of the Russia asset sanction by the US. So you've got sort of BRICS countries buying an awful lot of physical gold. So thinking that's going to do well over the next year, I've been sort of buying a lot of gold and silver miners over the past sort of year and a half, really. And Equinox is sort of one of those that hasn't really got going all that much yet. It's at sort of $6, so it's up from last sort of few months. It sort of had been hanging around the mid fives and sort of the mid fours towards the beginning of this year before gold really started going. But gold's up from 2,000 to 2,400 in that time, and usually you would expect the gold stocks to have moved quite a bit more. I think something people aren't really sort of taken too much into account is Equinox's large ramp up in production. So they were sort of doing 600,000 ounces roughly, 5 to 600,000 ounces at a much higher all-in sustaining cost sort of over the past few years, but you did have sort of the spike up in 2020, 2021 time, and that year they did 550 million in net profit, and the stock was at, where were we, about $12. So yeah, off of 500 million, and profits expected to go quite a bit more than that, at least this year, and certainly next year. Looking through their presentation, they just sort of show you how they've been growing sort of quite substantially from, the very beginning, 25,000 ounces, up to 780,000. This is a little bit out of date. They've bought the remainder of the Greenstone mine, and that is now pretty much ramping up and in production. And they're looking to get to 1 million ounces per year, which it's looking like they should do next year. And this year will be sort of closer to 800,000. I think this is what a lot of people are missing. They're lowering production costs. The new Greenstone mine, they now own all of it, is 400,000 ounces at sort of 1,000 all-in sustaining cost. So it's reducing their overall all-in sustaining cost to, they're saying next year, about $1,300, sort of $1,325. Before they bought the remainder of the Greenstone mine, it was about sort of 1,400, 1,450. So yeah, $1,300 with gold at sort of already $2,400 is very, very good margin. And they're sort of showing this as increased EBITDA next year, 2025, with the additional 40% of Greenstone. Should push them up to $900 million for the year. They show it sort of slightly decreasing for 2026. But again, something that, even reading this, you sort of think, wow, that looks very, very nice. But this, if you come down here, this is based on analysts' consensus estimates of gold price as of April the 19th. And you have to dig into this, to find out exactly where those numbers come from. They do just show you their previous guidance. They were showing 2024 at sort of $1,630 to $1,740 all-in sustaining cost. Now that they've bought the rest of Greenstone, that's brought that down to $1,565 to $1,675, and 2025 should be quite a bit better than that. But yeah, they sort of give you some other comparison metrics for for price to NAV. This seems to be the main way people like to value these gold and silver companies. It's not a metric I like, and sort of I would think in a decent gold bull market, I think it's going to attract the more sort of traditional investor, and people will be valuing it more on a sort of price to earnings or enterprise value to EBITDA ratio. So based off that 900 million EBITDA figure, it could be pretty good. But yeah, they're sort of showing high reserves compared to the competition, high production per year compared to the competition, and production growth, which everyone likes growth. But yeah, you dig right through and sort of find their analyst consensus gold estimates for 2024, 2025, and 2026. So they have 2024 at $2,221 average for the year. So if we have a look at the gold price chart, sort of 2024, you had the first quarter admittedly at just over $2,000, but then it sort of ramped up in March, and we spent all of the second quarter at sort of $2,300. Between $2,300 and $2,400. So unless we sort of drop down from here, into the sort of 2200s for the rest of the year, they're sort of putting average price for this year at 22.21, as you can see on the line here. So that, to be an average for the year, seems quite low. But again, more importantly, they have all of next year, all of 2025, at an average of 22.40. So, from where we are now, to be round about here as an average for the whole of next year, where I would say a lot of people, quite rightly, are expecting this to be sort of potentially off the chart here somewhere, maybe an average of sort of $2,500. I think there's very strong case for us going to sort of 2,500, 2,600 by the end of the year. And, if that were sort of maintained, even just maintained at $2,500 to $2,600 for next year, that is an awful lot higher than where they're projecting. And then 2026, they're actually predicting it coming down to 2,113 per ounce. So hence the lower EBITDA figure that they had, coming down to sort of more like 875 million EBITDA it's looking like. But yeah, so I think it's this 2025 figure that could actually end up being quite a substantial amount higher than it is now, possibly over $1 billion, maybe closer to sort of, if we were at $2,600 for the whole year, it could be 1.3, 1.2 to 1.4 billion, I guess, depending on sort of sustaining costs, expansion costs in other areas, and tax and all that sort of thing. I mean, we look at previous years, they have sort of converted EBITDA of 774 million into 576 million EBIT and 554 million net profit. So yeah, EBITDA pretty much trickles down to net profit, about 80% of it. When it's lower, of course, there are more costs to be borne. 235 million EBITDA, down to 22 million in net profit. And then sort of the last couple of years, 130 was a net loss, but this is sort of write-downs and the sort of expansion of Greenstone. The last trailing 12 months, 252 million of EBITDA, again, was a net income loss. So I think this is where people are seeing, they're just looking at the last 5 years and sort of, I would think naively saying, well, they're losing money at $2,300, $2,400 gold, which I don't think is the case. This is sort of expansion and ramp up of a new mine. I think as we get a full year, 2025, of really decent EBITDA numbers, sort of hopefully eclipsing the record we saw back here, 774 million. If this goes closer to sort of 1.2 billion in EBITDA, then it could be very rosy. I think they can work on an EBITDA multiple. It has sort of certainly happened in the past. You can look at previous quarters. They've been at 16 times, dropped down to 11 times, and sort of over the past few quarters they've been at sort of 8 or 9 times, while EBITDA has been fairly low, but they have risen up to around about 12 times at the moment. You look at more sort of established miners like Newmont. They've, I'm guessing, had a bit of a drop in EBITDA temporarily. I haven't really looked sort of too much into Newmont's figures, but you can see sort of generally, they're at sort of high teens. So yeah, if we were to sort of potentially get to say 1.2 billion even in EBITDA for the next year, say at 15 times EBITDA in a sort of broad bull market for gold, could be looking at $18 billion on the stock. And at so they've got 386 million shares shown here. They do have some convertible debt, and in the you can look through the presentation, they're sort of saying if all the convertible debt is converted into shares, then they'd be looking at around about 510 million shares outstanding. So divide that by 510 million shares, you could be looking at $35 price. So admittedly, that is That is what, just about a 6x in price, which would seem incredibly bullish by the sort of end of next year, but I do think it's there's certainly potential. Maybe not 15 times EBITDA, but yeah, that is where the sort of thesis is. Obviously, we're not going to get to, companies like, I just sort of pulled up Broadcom here, show people do use enterprise value to EBITDA. Broadcom were always sort of at the high teens, and they've risen to sort of 28, 35, and now at 42 times EV to EBITDA, sort of because people are expecting earnings to sort of continue growing. But yeah, I don't think we're going to get to that. It's still sort of mining company, and they don't have the sort of profit margins that people like Broadcom do for any length of time. If we get a very broad bull market in gold, you might get sort of a year or two of really good margins, and then maybe it comes down again. So the idea on the options, just coming down to options profit calculator, I am buying the 16th of January 2026 options. And yeah, I've been sort of looking at the highest strike that they've got, which is $10. So I'm betting that the stock will be above, or hopefully quite significantly above $10 by the end of next year. As I say, we're sort of in theory, potentially looking at $35. That's obviously a little bit of a moonshot bet, but to think we could get to sort of $20, that would be $10 over the strike price, so that's times 100 shares. That would be $1,000 per contract, and you can see sort of they're roughly being bought and sold for about 63 cents. So times times 100 shares, that's $63. So potentially $1,000 per contract divided by $63 would be sort of nearly 16 times your money by the end of next year if the stock were to go to 20. If it goes to 35, obviously on the sort of moonshot territory, then you'd be looking at $2,500 per contract by $63. Yeah, that's nearly 40x your money, but that's sort of a bit of a moonshot. But you can see the idea here. If we sort of get to what's looking like 1.2 billion in EBITDA next year, that's sort of largely based on around about 1 million shares next year. Sort of looking at $1,400 ASIC to what I would hope is maybe about $2,600 price, so $1,200 potential of EBITDA there. Yeah, $1.2 billion in EBITDA. That's basically the idea behind buying the options. It's just a sort of higher leverage play. It's obviously more risky. I was sort of buying these at when Equinox was sort of in the $4 range, and admittedly they were sort of, instead of $63, they were $50, $45 at one point. I think I even got some at $40. I think they were at sort of 50 a few weeks ago, so I should have gone a bit harder. I've been sort of buying these at $65 this week, but there certainly is risk there. If the stock, say, on a sort of bullish gold move, doesn't do what I think, and it goes to, say, $9 by the end of next year, my stock in the ISA is at sort of $467 average cost, so I would be up 100%. And if I sort of held this thinking that, it's going to go up and up and up all the way till the end of next year, and it goes to $9, then everything I've bought would be worthless, where the stock in my ISA would be up 100%. So yeah, there's certainly risk. I'm betting that it does sort of a great deal more than that, but we'll have to see. So a quick look at economic news for the week. It was a fairly sort of quiet beginning of the week, not too much at all, really, until Thursday. You had the GDP figures for May for the UK, sort of a little better than expected, 0.4%. Still a little bit lagging, obviously. We're into middle of July nearly. Um, some sort of reasonable manufacturing figures, and then you had the CPI, which seemed to US CPI, which seemed to sort of kick off huge moves. You had jobless claims sort of almost exactly as expected, slightly lower, and CPI was lower across the board. Monthly core CPI of 0.1% was expected 0.2, brought the yearly down to 3.3. That was expected to stay the same. And then similarly, 0.1% off headline. The monthly headline, CPI, was negative. I think this is sort of what was making the headlines. First, sort of, we call it deflation, minus 0.1% on headline CPI. So interesting. And then producer price increase for the monthly of 0.4%. So people producing goods is slightly more expensive than expected. Even core sort of more. So this isn't just food and that sort of thing. You can see sort of PPI as a leading indicator for CPI. So maybe this inflation doesn't come down to the 2% that they want it to. So as I say, portfolio-wise, this gain this week has largely come from gold and silver. Coeur mining up to $6.66, lovely number. CleanSpark and sort of Riot have been middling around. Did sort of rise at the end of Friday, sort of back up to, Riot was sort of closer to $9. CleanSpark was sort of in the 14s, so that's come back a little, but still languishing around where it was, nowhere near the sort of $21 highs. Equinox, as I say, moved up to $6. That's sort of reasonably in profit now, but nothing like Coeur mining. Fortuna up to sort of $5.33. And I have made a new position, Hive Digital. So I think I sort of covered them a little bit previously, and they've sort of been increasing in price slightly. Didn't want to sort of miss the boat because I still thought even 350. I think I got in at 343. Still a reasonable price. I think it's got huge potential sort of over the next year. Again, sort of on a moonshot Bitcoin price of sort of 180k next year. I think Hive could be looking at sort of $30 to $40. So yeah, whether it's $3 or $3.50, doesn't really matter too much. Interactive Brokers side looking pretty good. Pan American sort of in the high $23, $24 range. And KGHM, I think that's a new record, 156. So very nice. And on the invest account, this is just looking nicer and nicer by the week. High max at sort of $24,000. That's 420% up now. I can sort of remember just 2 or 3 months ago when this whole position was at about £3,000, and I haven't bought any. So yeah, very, very nice. Sort of the power of options moving on a stock from on a stock that nobody expects to go up to now suddenly people labeling it an AI stock and sort of saying, where can it go? How high can it go? Rather than, how much lower can it go? Coeur mining up to just about $20,000 now as the total position, because that has been riding high, 500% in the green now. Equinox, as I say, is the one that I've been sort of buying more of because it just hasn't really got going yet. But their new mine is just getting into production, so I think we've got a long way to run. But yeah, 22% in the green. CleanSpark has dropped back a bit, understandably. Core Scientific dropped back ever so slightly. Fortuna, I have made some changes. It's showing 50 contracts here. I sold pretty much everything, that because they were end of this year or sort of January next year options rather than January 2026 options, and I sort of not sure how much of a move we'll get by the end of the year, really. Whereas sort of by the end of next year, I'm very, very fairly confident, I would say, that we should get a decent move. So they were looking similar value, really. So I sold all of the January this year and bought January 2026. So yeah, that's reset. Took a little bit of profit on some of those and a little bit of loss on some others, and yeah, they're all 2026 now. So very nice. Similarly with Riot, actually, Riot were I think I had 7 contracts for January 2025. I've just sold those and rebought January 2026. So the again, that was actually taking a loss on those, so I gained a little bit of tax back. And I've bought some Hive, £632 worth, not a huge amount. The sort of options have run away from me a little. I'm not 100% sure I want to sort of be chasing them up higher. We still have potential a bit more selling coming on Bitcoin from sort of potentially US government, potentially Mt. Gox coming. So yeah, I'm sort of biding my time. If they don't come anywhere near here again, then fair enough. Might just carry on buying sort of Equinox gold, but yeah, got 4,000 cash in there, and I do have quite a bit more on the sidelines. So we'll have to see where things go. That cash may be sort of sitting there, and I may have missed the boat, but we'll see. So leave your thoughts in comments below, and like and subscribe. See you soon.